Good afternoon. This is Keith Brown with some commodity commentary for Thursday. It's about 4 o'clock on Eastern Time. The stock market is down today. It was down 300 yesterday. It tried to stay up today. Could not do that. I don't think it likes the election. And we're down another 120 points today. So that'll be some outside negativity for a lot of the markets. The dollar was up today, but so was crude oil. Cotton was a little bizarre in that we closed lower today. That's not very bizarre, but at one time December cotton got within 20 points of March cotton. And in recent days December has been under March cotton for about a difference of about 130-40 points. So we're almost nearly inverted again. I don't know why we would do that. But of course there's a lot I don't know. Nonetheless, we do know options expire tomorrow. And that may have something to do with it, and certainly supply and demand comes in tomorrow. I don't see how the USDA is not going to raise the U.S. crop nor the world crop. If Chinese consumption stays the same, that could be positive. If they were to lessen Chinese consumption, that's negative. It's really going to add to the carry-out even greater than it is. We may go to 80 million bales, but again, we need to see how the market does respond to that. We're up in wheat today. Wheat was the leader, almost traded $9 today. Still dryness, I think, as they drill the national wheat crop is part of the reason here. And I think there's been some trouble overseas as well. Corn today backed off a little bit, not much. We're waiting on those numbers tomorrow. And beans were down 10 cents. Of course, the thinking is South America has been maybe shifting some acres from corn over to beans. Hence the strength in corn and the weakness in beans. But also tomorrow we should see a larger corn crop and bean crop based on the yield per acre rallying a little bit. However, the demand, particularly for beans, may be such that it would offset any kind of larger increase in that crop. But of course that certainly remains to be seen. And a macro comment, of course, with the election of Barack Obama, and we choke when we say that, I guess in the grand scheme of things, his administration would be one that would be bearish or negative to the dollar. So therefore, export beneficial to row crop commodities. So that's good. I also think they will continue to throw money at the green energy, solar, wind, and ethanol. And so that could certainly keep corn prices up, acres up, helps cotton, corn and beans, I suppose. But otherwise, if we get into a fiscal cliff and have some major economic troubles, I think all that falls by the wayside. So we'll just have to see how that does pan out. But we do get supply-demand numbers in the morning. We'll try to get those out to our consulting subscribers. And if you're not one of those, certainly give us a call. If you have any questions or comments, give us a call, 1-800-910-1910. Thanks for listening.